Sean, thanks so much for taking the time to chat with us. Really excited to learn a little bit more about your background and the model that you've built to do forecasting for the self-serve business at Figma and to launch the template live to the world through Equals. Before we get into the model itself, I'd love to start with just a quick background on your professional journey.
Yeah, for sure. So I come from a finance background, started my career in investment banking, and then came out to Silicon Valley in 2016, I think it was, after business school to join a startup called Enjoy. Did a bunch of different work there, wore a bunch of different hats, very startup-y, cliche, but true. And through my work with product and the designers, I started to just get really interested in design. And then I learned what Figma was sometime in 2018 and basically got a job there as fast as I could after using the product. I thought it was cool. By no means a trained designer, but I thought it was really cool. And yeah, so I joined there in 2018 as second hire on the finance and biz ops team. My manager who hired me, I was his first hire. He ultimately grew to be CFO of the company. So at the time that I joined, there was around 40 people there. And, similar to what I mentioned above, just kind of did a ton of work in a number of different areas around finance, marketing, sales, ops type stuff, working with product. And the day job, so to speak, was in strategic finance. So, I managed our corporate operating model, built and managed our forecasting model, and the performance tracking that went with it, assisted with fundraising, et cetera. And this is where I really learned the skills and allowed me to build a template that we'll discuss here. And I was there for 4 years until I joined Craft Ventures, which is an investor in Equals, in February. And yeah, it's been an interesting time to join the venture market for sure. But Figma was basically a crash course in everything B2B SaaS. So and especially as it relates to strategic finance, it was like a really cool opportunity.
Yeah, crash course from one of the best. That's super exciting to hear.
Yeah.
We're definitely here to talk about the model, but I think before we dig into that, I'd love to click into a little bit more around when you first joined Figma. What did the company look like? What was the size of the business? And some of your focus there.
Yeah, when I joined Figma, the company was, just under 1 million in ARR. They had started monetizing less than a year before I joined. So the company itself was, kind of older. There's kind of this, I guess, famous story of how long it took to build Figma as a product, but the GTM function and monetization was like pretty nascent. So at that time there was only self-serve, which was the pro tier. It was 12 or 15 bucks per user per month, depending on monthly or annual. And you could only purchase via a credit card. When I joined, the enterprise tier was just starting to be built by internally. And so we didn't have any sales folks. The key partners with finance was really product and growth. So we ended up launching the enterprise tier and started ramping the sales org in 2019. And that's when kind of the business started to really take off. But, ultimately my time there, the business went from under 1 million in ARR to 200 million plus by the time I left. And then, it's kind of well documented that it's, hoping to get to 400 million plus by the end of this year. So it was a really exciting time. But what was really interesting is that, about 60% of the business, even when I left at 200 million in ARR, was driven through sales and mostly the org tier. And the remainder was self-serve. So self-serve was kind of quickly approaching 100 million ARR when I left. It's probably there by now. So it's a pretty crazy success story from a self-serve bottoms up perspective.
Yeah, I would definitely say so. A lot of companies would love to have a similar fate or outcome to what Figma was able to achieve. You hinted on the importance of it a little bit already, but when you're joining a company at such an early stage, around 1 million in ARR, 40 employees, it's like the potential paths you can take on where to focus your time seems sort of limitless. But how did you end up developing a specialization in self-serve?
Yeah, so it kind of goes back to, the context or the state of the business when I joined. We didn't have a sales team yet, so our entire business was self-serve. And my initial role at the company was managing our ARR reporting and forecasting. And, that meant owning and iterating on our model, which we'll talk about a little today, to be as accurate as possible in our self-serve forecast, and to also, and almost more importantly, understand what was or wasn't working in our funnel. And, if we were hitting our forecast, and, why we were or why we weren't. So I spent a lot, I ended up spending a lot of time in sales ops as we started to scale, which was great just from like learning that side of the business and growing that team. But I think it was the institutional knowledge of our self-serve business that, like, I don't know, really put me in a good position at the company, because, sales was actually so dependent on our self-serve or our bottoms up funnel. So I was also just a little bit more fascinated on how to like monetize and optimize, millions of users as opposed to like hundreds of thousands of leads in sales. It was just like this scale problem that got me excited. So, as we continue to grow, I just had a really great understanding of the triggers in our self-serve business, and really the sensitivities. And, I had a lot of fun like working on this model and creating this template, that's super similar to how we looked at Figma, because it kind of reminded me of those days.
All right, all super helpful context. Thanks so much for walking us through that, Sean. I think with that in mind, it's probably a good time to actually do a demo walkthrough of the model itself. So if you wouldn't mind giving us a screen share here and walking us through the template, and I'll stop you with some questions along the way.
Yeah, of course. Perfect. So as we discussed, this model allows you to track your historical self-serve ARR and forecast it out based on how cohorts have performed. So just some disclaimers, I guess. This is specifically for a user-based pricing model like Figma's, but the core cohort approach, or structure of the model, can be adopted for any pricing model. And as I go through, you'll see that everything boils down to licenses. We're doing this on a license-based cohort, and you want to find basically the current number of paying licenses you have, and forecast that out and multiply that by your price per seat, and boom, that's your recurring revenue. So I've simplified the model quite a bit for this purpose, or for this template, but there are basically 5 steps to the model. And that starts with your top of funnel, which includes traffic and signups. So quickly, just to look at traffic, you can see that I'm looking at, or really the model is structured in a month over month format. So what you can see is this is historical organic traffic month over month. And you can get into a lot of detail here, right? You can get into things like source, like things like user type, geography, whatever you find like helps you understand your top of funnel best. But for the purposes of this template, it's just, a single line looking at your organic traffic month over month, seeing how that's trending from a growth perspective, and you're going to see seasonality impacts, et cetera. And then using that, once you go from, this model is updated to the end of March 2022, and using that to really forecast your organic traffic growth month over month into the future, right? So I'm assuming just this model at 3% in the base case. Something I won't talk a lot about is paid. In the same way, you can get into a lot of granularity here. Things like campaign by campaign, lead source, wherever you're paying for traffic. Figma actually was lucky enough where it didn't have to spend a lot on paid traffic. So I won't get into too much detail there. It's a singular line as well, but it's important to, separate out organic and paid traffic. And this is when you're forecasting this out, you're working super closely with your growth product and your growth marketing team. And what we'd ultimately want to get to is this logged out visitors line, right? So this is unique visitors to your site in a month that are not logged into the product, like at Figma. And these are what represent your opportunity for sign up conversion. So the second step in the model, and what finishes out your top of funnel, is really how that traffic's converting to sign up, right? So similar to visitors to your site, you can get really granular here as far as source or user type or geography. So this template is just looking at a simple, single line for signups, but you're looking at how that organic traffic is converting to signups over time. Right. So, this model, for example, is showing something around a 10% conversion rate. Just to be conservative, it's being forecasted out in the template at 9% in the base case. These two steps really constitute your top of funnel. For a bottoms up business like Figma, this is actually a super sensitive, driver in your model. Low percentage point beats or misses in traffic or signups can, drive outsized misses or beats in ARR. So this is something you want to, spend a lot of time on, and it's pretty simple in this template. But that's really your top of funnel before you move into, paid conversion and onward.
Yeah, this is a super helpful starting point. I guess I'm curious, you probably started out with a simplified view that looked like this, but as the business grew and scaled, you were adding sort of more parameters to slice the traffic by. Is that right?
That's right. Yeah, I think one thing that we cared most about was really source, because for a collaborative tool like Figma, you have two main sources, like, kind of net new traffic, if you will, or organic traffic, and then product driven sources, right? So things like shares and invites. So separating those out were really important to us, because we felt like we could understand whether it was marketing initiatives or product initiatives, what could drive those, different sources of traffic. But like I said, you can kind of cut it in a number of different ways, whatever you feel gives you kind of the best pulse on your top of funnel.
Yeah, and taking that one step further, I guess what it would mean is by being able to talk about product or the organic piece, like you have actually like different representatives or owners who can go in and take specific actions depending on trends you're seeing or ones that you want to influence, right?
Yeah, that's exactly right. It kind of gives you the opportunity for this model to be, which I think we might touch on later, but kind of the first signal or the beginning of the investigation of something going wrong or right in a specific area. So whether it be sign up source or sign up conversion, or sorry, traffic source or sign up conversion, you can kind of identify certain trends and then go to the functional leader and say, hey, this is what, our tracking model and our forecast model is showing me. Let's look into this a little bit more.
Okay, great walkthrough of the top of funnel side of the house. How about when you start thinking about new paid licenses?
Yeah, so new licenses is really the third step. And, this is where, now that you have historical signups populated and future signups forecasted, you're at the point where you should really start driving the model with cohorts, which I can get into and show views of. But basically, bottoms up tools like Figma have this exciting aspect to their business that you don't have just one opportunity to monetize your users. Instead, freemium tools allow users to monetize multiple times over months. And also that monetization is happening at random times. Some users are going to convert immediately when they sign up, some later on. So that's really how you should structure your model, is so you can understand how cohorts, in this example of new signups, will convert to paid licenses over time. So I can show you a little bit of what that looks like here by tapping in. But basically, you can look at a cohorted view of signups to new paid licenses over time. And, just for an example here, looking at this first cohort of January, we saw historically that we drove 610 signups in our top of funnel in January. You see that here. Now in M0, so that would be January of that year, the first month of this cohort's lifetime, it converted 73. Those 610 signups converted to 73 paid licenses. In M1, 59, in M2, 44, so on and so forth. And I'll add quickly that this is dummy data. This is not directly representative of what Figma did, though the trends are very similar. So what's important is to look at this not in raw numbers, but actually in a conversion rate over time perspective. So that's what we see here as we move down. That 610 to 70, whatever signups, that translated to, just about a 12% conversion rate of new paid licenses to signups in the first month of a cohort's lifetime. So you can see that over time, each cohort is following a similar pattern, which you want to see, because that I guess, the consistency in your tool and in your cohorts. You can also see that the, majority of conversion happens in the first 3 months, then it starts to quickly attenuate out. But by examining these rates over time in each cohort, you're really able to understand how you can forecast these out. So this is all historical rates for, the cohorts that we have. And then what we're looking at here on the bottom is average conversion rate, and then what conversion rate we're using, to forecast out new licenses on top of, the new signup forecast that we established in step 2. So this is where you're actually working with your product team to understand any change in the funnel, that might impact this in the future. And basically I'm, predicting a rate based on what I've seen historically. And, for each month, for each cohort, you can see it attenuates out as we saw in the historical data. And basically, this is the rate for each month that is applied to existing cohorts and future cohorts to calculate forecasted new licenses each month. And you can see what that looks like at, in its totality, I guess you could say, when you kind of zoom out and look at all the cohorts. So, here you have your historical new licenses for each cohort month over month. Here you have the signups that you forecasted out in step 2. And then now you see, using those different rates on a waterfall basis, how, you're projecting them, these future signup cohorts to convert into new licenses over time.
Yeah, and as you pointed out, after a certain point, those are no longer converting. So that's why we see some of these be zeros at the top and non-zero numbers towards the bottom.
Exactly.
Yeah.
And, you hope to see even older cohorts, coming up for somehow converting those users to paid later on, but you can kind of assume over a certain period of time, it's most likely that, you've kind of extracted as much value as you can of each cohort, and hopefully they're retained and keep using the free product, but that's typically what you see. And ultimately you're summing all of these, to generate your forecast of new licenses for each month. So that's really step 2 of the model, if you will, of new licenses. And back up, there's a lot of rows in the model. So now that we've nailed new paid licenses, we'll move on to step 3, and that's expansion. So really, though, I don't need to dive into the details of the waterfalls for the next 2 steps, which are expansion and churn, because they're really structured the same way, right? For expansion, you're looking at how each cohort of new licenses expand month over month to ultimately sum up and get your expansion license forecast. And for churn, you're looking at how each existing cohort of licenses churn month over month to drive your total churn licenses forecast. I'm not going to, like I said, go into the waterfalls, but they're structured exactly the same way. And ultimately what you end up getting to is where you can see, hey, how many licenses did I end last month with, my retained licenses? Let me add in the new licenses I've forecasted from each cohort. Let me also add in the expansion licenses I forecasted from each cohort, and then finally subtract out the churn licenses that I expect to lose. And you end up to a place where you have your total cumulative licenses. And that's the forecast that really matters, because you're just multiplying that times your price per seat to get to total ARR, which is below here. The one thing we didn't cover is that and you can see in here, is the split between annual and monthly licenses. Most SaaS tools have these 2 different plans, and those typically will behave differently as far as expansion and churn goes. So separating the 2 out makes a lot of sense if you want to be, as accurate as possible in your forecast.
Yeah, annual licenses at renewal at 12-month. Don't want to have any surprises coming your way. So having those side by side, I think, makes a ton of sense. We touched on this at the beginning of the walkthrough, but different points throughout the funnel here obviously have different sort of teammates involved. I'm just curious, how were you actually putting this model to use in terms of conversations that you're having with the business? Who are some of the stakeholders involved? what was kind of the update cadence? Can you share a little bit more about that?
Yeah, for sure. So, I mean, ultimately, what this model did for us is paint the picture of the funnel and really, obviously, therefore, the business. And this show is only self-serve, but I think I mentioned, as we layered on sales, we added a lot of complexity to it. But the model ultimately told us a story of how users and teams were progressing through our funnel and retained once they, made it all the way to paid. So it was equal parts. I mean, the purpose of the model was equal parts examining historicals but also equal parts like playing with the inputs to forecast our business. And I think a lot of product folks would, think of something like a forecast model as, strictly the business side or finance and not part of product. But in actuality, this model served us, as one of the biggest input into product decisions, or really, that first step in investigating what's working and what's not. So as far as a cadence, quarterly with the marketing, growth marketing, and product teams, we would review the last quarter and year-to-date performance in each step of these models across each waterfall, even across each cohort. And we'd review all the different drivers of the model. And we basically work with them to say like, hey, do you believe that, either maintaining this or improving this rate is possible? And once we did that, that would set our quarterly forecast on how we expected self-serve ARR to perform. And then, I would update this model each week and kind of like a sister model that layered in performance versus the initial forecast. And every Monday we'd update it, and every Wednesday we review as a team. And, using this, we could, see exactly, what was working as we predicted at the beginning of the quarter, and more importantly, what went wrong. Has conversion dropped? What kind of conversion? Was it the earlier months or 6 months or older for cohorts? What missed on top of funnel? Like which, for churn, like which is maybe more than we'd hoped. Or like which part of, or which like age in which cohort. So basically it was the first step in understanding what's happening, and we'd use it to identify a problem and then, go to the functional leader, whether it be product or growth marketing, and say like, this isn't working like we discussed at the beginning of the quarter, kind of, can we look into this more? And that would be, my job in biz ops with that leader and a data scientist to go figure out, what was happening.
Yeah, and probably some of those investigations that kicked off as a result of the trends you were seeing were what informed what new feature functionality you needed to incorporate into the model, right?
Yeah, that's exactly right. And, sometimes it would be just a small little bug that you noticed in a way in which, users were flipped on to be editors in the tool, or sometimes it would be result in kind of a bigger project of ways in which to optimize your sign up flow or something like that. It kind of varied. And even sometimes it'd be like in a complex, tool like Figma, which it seems simple, but it's actually a complex data model with users on multiple teams. Sometimes it'd be a wild goose chase to be like, hey, we don't really understand this at the end of the day. Like, we've done all of the investigation we can, and this is just an adjustment we have to make to the drivers in our model because, our user base is maturing in one way or another, something like that. So regardless, though, I think it did a great job of identifying that something was worth, digging into, and like identifying areas that, were kind of prime for optimization in a way.
Yeah, you're always on top of the vitals of the business, and it's sort of like a scorecard and a journey through customer life cycles. So super powerful model that you built here. Thanks so much for taking the time to walk through it with us. We're going to have this template published live on the Equals website so others can dig in and play around with it along with this recording, and an article write-up that we collaborated on with you, Sean. And just wanted to say thanks so much again for taking the time to put this together and share it with our users. This has been awesome.
Yeah, of course. Happy to do it. Hopefully it can provide some value. I certainly wish we had Equals when we were at Figma, because doing this all in one platform would have been great. But yeah, if anyone wants to reach me and ask questions about the model or anything, I nerd out on this stuff. I'm Whit at Craft Ventures, which I'm sure we'll include in the article and everything, but it's been fun. Thanks.
All right. Thanks so much, Sean.